झालं मरा रेडी मारतो लाईव्ह हा आपण सगळ्या कॅमेरा लॉक कर रहा लॉक करा क्या का लाइट मारते जा रहा हूँ
Good afternoon, everyone. So my name is Akshay Naik. Most of you all might know me because I'm the in-house faculty over here, and I'm teaching for the MCOM department. Today we are going to have a seminar on tax planning. Okay, this is the problem which I self-detected a couple of months ago because I found that many of our staff have been paying exorbitant tax. Okay, and especially in a situation wherein they could avoid paying all of that tax. Okay, so this will in turn help you to save a lot of tax at the end of the year, and as you already know, we are in the month of March, so this is the time when you have to submit your investments that you have made. Okay, and still you have got 15 days of time, so if you haven't made any investments, then you can still do it. Okay, so the very first question we start with, why do we need tax planning? Okay, I'm not going to go blah blah onto that. I'll just show you this illustration. Okay, this is my own tax management that I've done for this year. Okay, so you can see my tax liability is nil. Does it mean that I'm evading taxes? No, I'm not. Actual total tax saved by me is 47,470 rupees. That's a big amount. Okay, so with right tax planning you can save a lot of money, and after this session I hope that you'll be able to save a significant amount of money. Okay, just to give a brief overview of how did I save this much of money, that was through this investment that was actually ABC and ABCD. Right now it might just sound or appear very Greek to you. What are these sections? Okay, how much deduction does it provide? But I'll try to keep it less technical, where we'll focus more on the benefits and the easy way of doing it rather than highlighting all those sections, because you don't actually need to know the title of that section and all of that. Ultimate focus is saving the money. Okay, so there are certain concepts which we need to be well versed with before we proceed further, because I'll be using these terms in between, and if you don't know what these terms are, then you'll get lost. Okay, and these are quite easy. Assessment year is the year in which your income is assessed. Okay, this is the next year to the financial year. Whatever income that you earned this year will be assessed next year because you are paying tax then, unless until you are paying advance tax. Okay. Then the previous year, here slightly different from the common terminology. Here previous year means the current financial year. So if I say previous year now in today's time, then the previous year is current financial year, that is 21-22. Assessment year is 1 year next to the previous year. Okay. So whatever income that you earn this year will be taxed the next year. Okay, because only after March 31st you will get to know how much money you have earned. Then an SSC is a person who is liable to pay tax. So all of us are SSCs. Okay. And these are the 5 heads of income. Heads of income means sources of income. Because when you show your total income, it's just not from one source. There are multiple sources that we have from which we will be earning income. So that's why there are these 5 heads which are identified. And today we are going to focus more on income from salaries, because there is an extensive content in all of that. So we'll focus more on income from salaries, but ultimately your total tax liability will be completed by taking into consideration income from all the sources. Okay? Surcharge, I don't think that any of us will have to pay this surcharge. Surcharge is tax on tax, and it's actually for the super rich people. So if you have got your income which is higher than rupees 50 lakhs per annum, then you have to pay surcharge. Anyone who has higher than 50 lakhs here? Okay. If not, if anyone has, then we'll focus more on this. If nobody has it, then it just don't have to highlight more onto that. So this is an important and notable change that has happened, because if we were well versed with the income tax previously, then income tax is something which always keeps on getting updated. Every year you see during the budget there are new rules which have been passed, new benefits which are given, and this is one of those prime benefits that is offered. Okay, the new tax regime, and all of you all must know this because this can help you a lot. Okay. So currently there are 2 types of regimes. One is new and one is old tax regime. Right? So we'll first look at the old tax regime because this has been in existence for a long time. So how do you pay tax? You pay tax on your income, and to simplify it, there are income tax slabs. Okay, income tax brackets which are being used. So your income falling in that particular range will attract that percentage of tax. Okay, but most of the people commit a common error in doing this. Okay, so they think that it's quite simple. And what do? Let's say if your income is rupees 7 lakhs. Okay, so what you might end up doing, 7 lakhs multiplied by 20%, because this is what it is, right? But income tax assessment doesn't work like that. You have to follow each slab and then compute your income under every slab and then reach to the final amount. So that means over here in the same illustration, first till 0.25 you don't have to pay any tax. Okay? Next would be 2.5 to 5 lakhs. Here you are paying 5% of this amount. So your income is 7 lakhs. Till 2.5 lakhs to 5 lakhs you are paying 5%. So that will be 12,000. Now going one step ahead, and your income lies in this. Okay, so that's 7 lakhs. So 5 lakhs to 7 lakhs falls in this range. You are not able to take entirely 10 lakhs because that's not your income. So you are left with 2 lakhs in that range, and on this 2 lakhs you pay 20%. Okay. So 20% is 20% of this I'm paying for maths. 40,000. 40,000. So here it's 40,000 plus 12,000, 5,500 plus there's something which we need to add. Okay, so what do we need to add over here? Anybody has any clue, any idea? Something which is well associated with all of us.
Education.
Yes, says. Okay, says is the additional tax that you pay. Okay. So that's education and health says, which is 4%. And this 4% is only on this amount, not only income. Okay. So 4% of 2,500, something like just roughly take it as 55,000, is going to be your total payable tax. Alright? So this is how you compute. So what you have to do every year, you have to identify what is going to be your gross income. Okay, and how much tax you will have to pay. Now there is slight difference between all of this income tax slabs, and the differentiation is based on the general public, senior citizens and very senior citizens. And the difference is only in the first step. Over here it's still 2.5 lakhs nil, here it's 3 lakhs nil, and up to 5 lakhs for very senior citizens, that is about 80 years of age. Till 5 lakhs you don't have to pay any tax. But we all fall in this rate, so we have to stick to surcharge if it exceeds 50 lakhs. And this is another important development. Tax date of rupees 12,500. So now this is slightly complicated. So what happens under 87A? If somehow we are able to show to the income tax authorities by claiming the benefits of exemptions and deductions that your income is less than 5 lakhs rupees, then you don't have to pay any tax. It's completely waived off. Okay? So let's say your income is exactly 5 lakh, then if it's less than this, you just have to pay no tax. 12,500 is completely waived off. You don't have to pay to the government. But even if it crosses 1 rupee mark, okay, let's say this is the figure, then you have to pay the entire tax. There's no rebate. 12,500 is the entire amount that you have to pay. Okay, so our goal should be to bring it below 5 lakhs. Means actual real income is not going down. We are only showing to the income tax authorities that our income is less by claiming the benefits of deductions and the exemptions. Because higher the tax, higher the income, higher would be the tax. Lower the income, lower would be the tax. So in order to claim the benefit of this tax rebate, our goal is to bring it under this 5 lakhs somehow. Okay, so this is our task now. We are going to look at all those investment options and all of those benefits which you can take to bring it under this. So that was the old tax regime. Tax rates are simple. 0 to 2.5 lakhs it's nil. 2.5 lakhs to 5 lakhs it is 5%. 5 lakhs to 10 lakhs it is 20%, and above 10 lakhs it is 30%. Now this is the new income tax regime. Okay, that is. And if you see then here income tax rates are far less as compared to that, because 5 lakhs to 7.5 lakhs, over there it was actually 20% in this range, not exactly till 10 lakhs, but here it's just 10%. And every range increased by only 5%. So this is the differentiating factor. For every 2.5 lakhs rupees, there is 5% increase in the tax rate, unlike the old tax regime. Now, if you just facilitate a head-to-head comparison between these two, then it evidently looks like this is far better, right? So let's say if my income is 7 lakhs, then I would just go for this, because over here I have to pay only 15%. But that isn't the case. Okay, there are really some important considerations that you have to take into mind if you're actually opting for new tax regime. Okay, and that is, you have to let go all of those benefits which you would get in the form of exemptions and deductions under new tax regime. If you want to avail the benefit of lower tax rate, then you cannot show any investments. Even if you have made it, you cannot show your income which is reduced by all those deductions. Let's say I have the life insurance policy of rupees 1 lakh. I cannot deduct it from my income and I show less income if I'm opting for new tax regime. So I have to forego all those benefits which would I otherwise get in the old tax regime. Now, how to opt for old or new tax regime? Okay, this is an important question, and it is to be done in the beginning of the year. Okay, but now then it would be like we are already at the end of the year, so this is of no use to us. It's not the case. We have to select it at the beginning of the year. I have to tell your accountant, because accordingly he will deduct your TDS. Okay, and if we haven't done it, it's not a problem, because when you are filing your income tax returns, that time you can always change it. You have to go on the very first page of the filing of returns and select over there any tax regime which you want to opt for. So that means if you pay higher tax in the form of TDS, it will be refunded to you. That's not going to be the case where you have to pay more tax, because if it's showing higher tax liability, you perhaps won't switch it, right? So you can always change it. It's onto your hand how you have to go forward with this. Old continuous tax regime. So this is just a rough example. This is a person, Mr. Rahul, and he has got salary income of at least 10 lakhs. So we'll just try to see the difference between the new tax regime and old tax regime. So he's made several investments, like 1.7 lakhs here, 20,000 over here, and all of those. Okay, going into 75,000. So if we try to compute his tax liability under both these regimes, new and old, then you can see how much tax is actually outgoing from this. On slide, new tax regime looks really attractive, isn't it? It's got lower tax rates, but actually it's not, because under new tax regime he has to pay 78,000, but under old tax regime, even with the higher rate, he has to pay only 65,000. So where did he save the money? Okay, he saved the money over here. ATC 150,000. Investment which he had, 80D is the medical insurance which he had, and 24B is the house interest, home loan interest. And after that, that amount was deducted from his gross total income. And that's how we get this. That's quite clear. If you have got investment goal, you are going to make certain investments, it's always better to go for the old tax regime. If you are not making any investments, when I say investments from the purview of the income tax. For example, if I investing in equity, it's investment, but we cannot claim benefits of any deductions of equity, because there are certain predetermined fixed investment options which we have to choose. Okay, so we'll be looking at only those investment options. So all of us went through this in the beginning of the year. We were given that sleep, and many of might have been clueless what to write it. Even me, to be frank, a couple of years ago, just randomly wrote whatever I could have with my head and gave it to him. Okay, and as per that he was deducting TDS. I found that close to 5,000 is getting deducted, and I'm not even paying that amount of tax ultimately, because I've invested a lot more than that. So what you have to do is that you have to actually, in the beginning of the year, decide where you are going to put the money. You have to compute the tax liability. Okay, and that's just for reference purpose. You can change it. Now the form that is given 12BB to you, that is the actual declaration that you are making. That was just tentative to help him to deduct your TDS. Okay, if you had paid more tax, then it will get refunded. If you had paid less tax, then you have to pay it at the time of filing of income tax returns. Okay, so 12BB is something that you need. So now these are all the benefits. Deductions from gross total income. Now let's say from the salary you have earned 10 lakhs rupees. That is your gross salary. Now when you deduct all those deductions which are available, that will be net income. Okay, so we are looking at all those benefits which are available. So actually there are only 3 broad areas under which most of these deductions fall. So the first, very important, and this is the focus, section 80C. Okay, I must try to remember section 80C because it deals with investments. No other section starts other than with 80C deals with investment. That is for expenditure or donation or anything else. Okay, so under section 80C, all of this falls under one category. 80CCC is for pension products, and this is for the pension scheme. 80CC1B is for the NPS. One important point of this particular money. Okay, let's say if I've made investment of 2.5 lakhs, I cannot claim 2.5 lakhs just because I've invested 2.5 lakhs, because there's maximum limit onto that. Only up to 1.5 lakhs can be claimed. But recently, the government introduced additional exemption of rupees 50,000. And this 50,000 is only for NPS, National Pension Scheme. And most of you all might be already part of it, because it is in detail in the further slides. Okay? ATC 1.5 lakhs, 2 lakhs if you include NPS. This is the investment that you can claim as deduction. Only in select investment options. Okay. Then 80D. This largely deals with, there's this one kind of characteristic which is very common in all of this. And this is something which is medical, which deals with health. Okay. So 80D is for medical insurance. If you have taken any medical insurance, you can claim benefit under this for self, spouse, parents, anyone, not only for yourself, but for the family. Because up to this 1 lakh, it is just for saying you have to fulfill all those conditions, you have to take it for the parents, and only then you can reach for this limit. 80DD, maintenance of medical treatment of disabled dependent. If there is any disabled dependent in their house, they are incurring any money in that treatment, then up to 1.25 lakhs you can claim. 80DD is for treatment of certain disease, and those diseases are specified. So I'll show what those diseases are up to this 1 lakh. And in this case, SSC himself is physically disabled. Okay, if under section 80U, you can claim 1.25 lakhs. Not applicable to most. Then section 80E, and if you are a parent, then here you can claim this amount. Section 80E is for interest payable on education loan. If you have taken education loan for your children, for yourself, or even for your spouse, you can claim deduction. And it says no limit for deduction. Okay, but this no limit is only for example, 10,000 is the amount you are paying as installment. You cannot claim 10,000. Only the interest amount on 10,000 is available as deduction. Okay? And there is no limit for that. Section 24 might be applicable to some of us, whereas if you have taken any home loan, okay, on the home loan you can claim deductions. So if it's the actual principal amount that you are repaying, you can claim it under section 80C, or if it's the interest amount, then deduction of up to 2 lakhs can be claimed for interest under section 24 if you have taken home loan. Okay, 1.5 lakhs, it will go in the 80C for the principal amount, and only the interest amount up to 2 lakhs can be claimed as deduction under section 24. And this is something which Anand sir will be really well versed with. I doubt he will share his technique of saving tax. It's not here. Okay. 80G part, largely deals with donations. Okay. So whatever money you donate, you can claim deductions for that donation. 80G is for certain charitable funds and charitable institutions. 80GG is for scientific research or rural development. Even educational institutions are covered under this. If you are donating any money for research, like for the PhD research and all of that, you can claim under it. GG is for political parties. So recently we had elections. So if you have donated any money to any party, then they have played very smart. Yes. Now they have tuned it for their own benefit. So donate as much as you can because you can get the deduction. Donation to political parties. And only this part is private because it is GG. Now 1000 allowance, most of you get 1000 allowance. And about the house rent allowance, it is given to certain employees regardless of they are staying in rented house or not. Okay, so I might be getting HRA, but it's not necessary that I stay in a rented house, but still I might get it. Okay, HRA if you are receiving, then you can claim deduction on HRA, provided you are staying in a rented house. HRA as a benefit allowance should be given to all those employees. Okay, but you can claim deduction only if you are staying in a rented house. Otherwise, it's just the income and it's fully taxable. Now, what about those people? Like I don't get HRA, and some of my colleagues might also not be getting HRA. But still, if they're staying in a rented house and paying rent, then under section 80GG, up to 60,000, they can claim. Like I have been personally using this for last 2 years because I don't get HRA, I still pay tax. Okay, and hence I'm claiming deduction under section 80GG. So I'll just give you again a brief recap of what we have seen. 80C deals with investments, up to 1.5 lakhs, otherwise 2 lakhs with NPS. So all the investment that you are making will be covered under 80C. Simple CCD. 80D largely deals with medical expenditure. Okay, such as treatment of disease and medical insurance for family. 80E, E for education. Okay, interest on education loan. You can claim that amount of deduction. Section 24 is for housing loan. Interest on the principal amount can still be. And ultimately, we have got 80G. This largely deals with donations. Okay, and that has to be a specified organization. Okay, you just cannot donate anywhere you want to and claim deduction. Only certain institutions or organizations are allowed to give the deduction. Then TTS for interest received in savings account, and TTB is for senior citizens for the interest. Okay. So bank interest on savings account if you are receiving, then you can claim deduction under TTA. So that's why the minimum lock-in period for this FD is 5 years. You cannot withdraw money before 5 years. But again, there were certain loopholes as well. You know what I did actually over there? I had to save money. At the same time, I had to have the liquid cash as well. So I went to the bank. I made a tax-saving FD of rupees 1 lakh, but I needed that money. So by keeping that same FD as a collateral, I obtained the overdraft facility. Okay, so I got 90% of that amount, 90,000 in my account. And you know, on the overdraft facility, interest is charged only on the amount that is actually withdrawn. So on my phone now, I've got that 90,000 limit. For example, if I need 20,000 today, I'll withdraw only 20,000, and on that 20,000 interest will be charged. Okay, so if you want liquid money, then you can do that kind of adjustment. NPS. So there's going to be a slight difference in NPS over here, because some of the staff would be having NPS by default. It is mandatory for them to contribute to the national pension scheme, employees of the central and state government, and some of the contract basis staff, they might not be having NPS because it's not necessary for them. Okay. You don't have? I asked in the office and they say that 10% is actually deducted as NPS. Okay, you before 2005. Those who joined after 2005, for them NPS is mandatory. Okay, you all had to.
For them it is different.
Yeah, employee provident fund and all of that. Yeah. Okay. So now NPS. Those who are already paying NPS, okay, by default because their employer opened an account, they can claim deduction under section 80C. But what about the other people? You know, if employer is not making an NPS account for you, that does not mean that you cannot make one. It's very simple. You have to go on the portal of the NPS or download the app and open an account. It is as easy as opening the bank account and voluntarily contribute the money over there. Okay, but you cannot withdraw that amount. Okay, it's just locked in over there for a long time. So here, NPS is kind of market linked, and you get the benefits of equity in that, because whatever money you'll be contributing, further it will be invested in equity depending upon the plan which you opt for. So if you want to invest in capital market, stock market, you can do it indirectly because you are investing in NPS. NPS, like mutual fund, will invest further in the equity and the debt in that proportion, 75%.
Who manages this equity profile for them?
They have got that fund manager. Okay, the government has got their management. There's a team. It's just like pooling the money from various investors, and they will decide. But we have the option to select, okay, which plan you want to opt for. So you just give it in their hand, and they will manage it from there. You
Are
don't
we
need.
able to track how the investments are being made? Do they release?
Yes, they will show you the sectors in which they have invested. For that, you just have to dig a bit and find out where your money is actually invested. Just like mutual funds, they show you the entire summary. You know, in which company.
Every year they give the statement also.
Yes, you get the statement, but over there, the breakup of where your money is actually put will not be given to you. 75% equity means they'll identify which are the best sources, which are the
They're
best.
not informing us as to where the money is going.
No, you'll get the general
5%
statement. You'll get the general statement, okay?
General statement.
Yeah, but by default, it is not shown to you.
But it is like mutual fund, they reveal where the money is about.
Which sector?
Sector.
Which sector?
Companies in the sector are not giving the companies and how much percentage and
Yeah. So they will show that. So you have to just identify from where to get that information, because it's not made available to all the investors. you'll be also only getting the statement which shows how much returns you have generated, okay, or how much equity, how much contribution is equity and how much contribution is debt. In detail, if you want your entire portfolio, you'll have to maybe dig in a bit and identify in which sectors or in which companies they have actually invested.
We can keep on changing, shuffling, right? Between debt, equity, profile. I mean, just start considering with this
Yep.
75-25. Over a
Exactly.
period, if you want to shuffle and change this,
Yeah, you
this
can.
weightage, we can do
The
that.
strategy. As you are young, when your risk appetites are high, that time you have to opt for higher equity. As you age, reaching close to 50s or 60s, that time you have to reduce it down because you want steady and secure source of income at that point of time, right? So you have to increase the debt profile at that point of time. And over here as well, there are two accounts, tier 1 and tier 2. Tier 2, if you are contributing, there are no benefits and there is no lock-in period. You can put money anytime, you can withdraw anytime, but you will not get tax benefits. Tax benefits are given only in tier 1 account. So whenever you are contributing money, let's say I download the app, I open the NPS account, and when I want to contribute, tap on contribute, it asks me in which tier account you want to put, tier 1 or tier 2. So that time you have to select tier 1 account, and through UPI, net banking, debit card, you can easily put in your money and take out the printout of that statement and give it to your employee. Okay, or you
Why
can,
would any investor look at tier 2?
because if they want to generate those higher returns and they do not want to park their funds, they don't want lock-in
But
period.
there are mutual funds, right?
Yeah, there are. But if they find this as an alternative source, then they can do that. Because, see, when it comes to mutual funds, largely it is operated by private sector, like Tata Mutual Funds and all that. This is the government-run agency.
They are managing it well.
Yeah, they do manage well. But we always have that, government sector means something we get higher safety. So that's why some people who are having those risk profile differences, they would do that. Okay, and yep, that's most of it.
What's the lock-in for tier 1? How many years?
Tier 1, okay, so I'm not quite sure exactly about locking period, but close to 5-7 years. After that, you can withdraw certain proportion, yes, partly, let's say 20% or 25%, not the entire amount at a time.
And that's get your money is taxable.
NPS, okay, returns from NPS, I'm not quite sure, but I think it is taxed. Because most of the
You
investments
can open in a minor's account and link it to it.
minus account, yes, you should be able to,
I don't think
Yes.
NPS
That is that was mentioned.
yeah, pension.
Like for PPFs, and then you can have index.
Because if you're opening a minus account, you will not be able to claim the benefit. Because these investments have to be in your name. Okay, so actually there is practically no use of opening it on minor's name. Okay, so there are these three subsections. 80CCD1 is for the employee's contribution. Whatever money you are contributing, let's say 10% that you are getting. The deduction, you can get rid of that. CCD2 is for employer's deduction, and CCD1B is for that voluntary deduction, that is for that 50,000, above 1.5 lakhs. So that is covered under 80CCD1B. So if you have voluntarily contributed any amount in NPS over and above that, you can claim it out. So this is something which I used because only I could claim up to 1.5 lakhs, but I needed more amount to make my tax liability nil. So I opened the NPS account and I utilized that additional benefit of this 50,000. I put in 18,000 there, and then I could get the tax liability of zero. So this is the mutual fund, equity linked savings scheme. Mutual funds are quite common and they many times offer really high returns, close to 18-20% on an average. We have seen that. We've got many AMCs which you can go for and get your mutual funds open. We've got SIP option in there as well. So that means every month you can contribute, let's say 500, 1,000, 2,000, depending upon your investment objective. Okay, and then you can do that. So I had invested close to 90,000 3 years ago, and it has become 1,35,000 now. Okay, because you get that benefit of compounding interest and buying the units when the market is low, and when it gets high, the NAV increases. A lot of calculations, but mutual funds are really good investment options, and over a long period of time, you can actually earn really high returns. You just don't have to withdraw it. And over here as well, there is minimum lock-in period of 3 years. Okay, so you cannot withdraw. And about the installments, then you would be like, every installment which crosses 3 years time, you can withdraw that installment if you want. Because if it's SIP, then you might ask, what is the 3-year spread? Okay, so the first or every installment which completes 3 years time, you can withdraw that installment if you want only that portion. Okay, or if you have put lump sum amount, then after 3 years you can withdraw. But this is the most attractive source of saving tax. Life insurance under section 80C, like if you have got life insurance corporations, LIC or any other company, then you can save money onto that. What about the other various products like term insurance or what do you have it?
Endowment plan.
Endowment plans. Endowment plans is kind of combination of investment as well as risk coverage. Term plan is purely for risk. It will give you great coverage for the minimum amount. Let's say with just 500 rupees you can get the coverage of rupees 1 crore. But that works like more sort of general insurance. If the person dies in that period, only then you will get the entire amount. If the person survives, then there is no money that is paid to you, just like vehicles insurance. But endowment plan, even if the person survives, you will get the principal amount and the returns onto that. But
Nowadays, term plans are also refunding you back whatever you have paid after the term is
Okay.
complete with higher rate.
alright, with more competition coming in like this Echo and Policy Bazaar and all of that, they have evolved these new products which will provide those additional benefits. Okay. So life insurance, most of us pay the premium. So if you are paying the premium in your name, then you can get the benefits. And if insurance companies, they are in the pension plans, opting for that, you can claim that, but returns are really negligible over here, 1 to 2%. So I would suggest you don't go for this. Tuition fee for your children. Okay? But tuition fee, we are well versed with the concept of tuition fee. Okay, that tuition fee includes only that component of your entire fees which is paid as tuition fee, not the gymkhana fees or library fees. So you cannot claim the entire amount to children. Okay. Stamp duty and registration charges, if you have purchased any property, then you can claim that reduction under section 80C. So 1.5. Okay. So this covers most of those investments which are part of 80C. Okay. So let's say if I invested rupees 10,000 in LIC, with 1.60 lakhs in PLS, only 70,000. That's the maximum. Okay. So I'll just divide those investments. We've got EPF, Public Provident Fund, Sukanya Samriddhi account for girl child, then ST, tax saving FDs, National Pension Scheme, ERSs, mutual funds, life insurance, pension plans for insurance companies, tuition fees, and stamp duty and registration charges. Principal of housing loan is deductible under section 80C. So that has the limit of 1.5 lakhs. Interest amount can be claimed under section 24. That has the maximum deduction of rupees 2 lakhs. Okay, but there are conditions over there as well. If you are not satisfying that, then it will be only 30,000. Okay. Yes, repairs and renovation for home improvement loans as well. You can claim reductions. That's so that's it. So we got home loan. Then principal amount can be deducted under section 80C and the interest amount under section 24 up to rupees 2 lakhs. If I am paying 2 lakhs as interest, then I can claim deduction straight away on that. Principal amount will be covered or merged with other. Okay, and if you are selling that property within 5 years, then all the benefits will be reversed. So you cannot sell that property if you don't want to lose out onto that benefit that you are receiving. So this is a home improvement loan for painting, for some repair work if you have taken loan, then up to 2 lakhs can be claimed for home loan. 30,000 is for home improvement, 2 lakhs is for home. Fine, let's look at the insurance, medical insurance. in today's time, this kind of really become a significant insurance because of the COVID and various health related risk. Most of us might be paying the medical premium for that. And for self, spouse, children and parents, whatever insurance that you have taken qualifies for deduction. 25,000 if you are below 60 years of age and 50,000 if you are above 60 years of age. So even though it showed 1 lakh or 1.25 lakh over there, that's not the actual benefit that you get. If you are paying, if you are under 60, then it's 25,000. If you are paying for parents as well, then 25,000 over there. So that would be your 50,000. And it's not available for buying health insurance for in-laws. Only self, spouse, children, and parents. For education loan, entire interest amount we can claim as deduction for self, spouse and children. And it's for full-time courses only, not for part-time courses. So this is treatment of certain disease. To be frank, I really don't know many of these diseases. Maybe just neurological and things. Other than that, I don't have much. There are really some rare cases where if there is any cost that is incurred for the treatment of this disease which I mentioned here, then you can reimburse. ATU and the assessee himself is physically disabled. Okay. 75% if it's normal disability and 80% or more is the severe disability. For that it's 1.25. And these are those disabilities which are covered. ATDD is for handicap dependents, and these are the disabilities if they have handicap. 75? Yeah, it depends on the disability. If it's normal disability.
But irrespective of the amount paid.
Irrespective of the amount paid. Okay. You're asking that or you're telling me?
I'm telling you.
I'm telling.
Okay, you're telling me.
To the amount matter.
Yeah, the complete amount. Okay. And donations to approved charitable organizations under ATG. Okay, but you also have to take into consideration for many of these organizations, the claim is limited to 10% of the gross total income. Okay, so if I say I'll just give away 10 lakhs and will get entire benefit, that might not be the case. Okay, because only 10% of the gross total income. So that's why you have to get a clarification from the organization to whom you are donating. How much tax benefit you are able to get. And it's only to approved organizations and institutions. And this has to be made in cash, not in kind or in any other sense. Donation to political parties and scientific research, full amount can be claimed as deduction. And scientific research over there, it includes university, college or other institution as well. For research purpose, if you have donated any amount. Interest on savings account under ATA, maximum limit is 10,000. ATTB is for senior citizen, maximum limit is 50,000. House rent, as I explained to you, if you are not paying HRA, you're not getting HRA and still staying in a rented house, you can claim deduction for the rent that you are paying under section 80GG, but maximum limit is 60,000. There's some calculation for that. So it is 5,000 per month, rent paid minus 10% of the salary or the actual rent paid amount.
The conditions.
Yeah, conditions. So the least of those three will be considered as the actual amount which is applicable. It's 60,000. So this is last you have to consider when you are calculating your income. You have to see all the sources from where you will be getting income. So when I am actually calculating my income, I consider income from salaries, income from other sources like interest income that I am receiving. If I have got house property, I have given it on the rent, let out, I have to consider that income as well. Okay. So once you have identified how much income that you are going to earn, okay, let's say 8 lakhs, the income that I am going to earn, I just estimated. I have to start planning tax from this moment itself. Okay, and there was this one thing which I forgot to miss. That's 50,000. This 50,000 is standard deduction. This is a benefit given to you by the government. So whatever is your income from salaries, from that you will be able to reduce 50,000. That means you don't have to pay any tax on this. That means your actual salary is going to be 7 lakh 50. So always take into consideration this 50,000 benefit. This is only on income from salaries. Okay, so let's say I'm getting 7 lakhs from depots, then 50,000 will be deducted from that, and my effective salary for income tax purpose is 6,50,000. Okay, so standard deductions is a benefit which is exclusively available for all the people. So now, once I have this 7,50,000, my task should be to bring it under 5 lakhs. Okay, and how I can bring it under 5 lakhs, 2 lakhs, let's say I can make investments. I cannot cross that. So then I might buy medical insurance, or if I'm doing some charity, I can
Buy
do it.
electric cars.
Yeah, buy electric cars and go on. So that covers most of it. If you've got any doubts or queries or questions.
If you're claiming interest from house property, then
Can you
can you
claim both?
claim both?
This interest and this housing interest?
Which interest is this?
Electric
Yes.
and
That is under different section. That is under 80 EEB, and housing loan is under section 24 and section 80C. I can claim this.
If you're claiming interest on an house property, then you are including one more deduction. Income from house property.
Yes. Over there, yeah, then you'll be showing that deduction.
Because even though that is negative income.
Yeah. For self-occupied house property.
So you are actually filing returns under 287.
Yes.
Salary and
Self-occupied house property. So that is going to be negative because of the interest on borrowed capital.
so divide the number. So if it is 2 lakhs, then that is divided by 5.
Okay.
Because we had this and this include that it is negative income from house property. That one it has to be divided. If you are filing returns under 5.
Just to write.
Another bottom up. But the filing then it will be divided.
SSC is an option. Pick whether you are filing or filing.
So now till 31st March you can make these investments if you want to save on tax. If you are not making any investments, then opt for the new tax regime. Otherwise, you can always calculate and see where you will be saving more. Even when you are filing the income tax return, that time the portal will do it by itself. You just have to switch and toggle through. Okay? And accordingly select the option when you are filing your income tax returns.
Okay, so I have to make some donations. Who donating under section 80 to me? Thank you.
Thank you.
Yeah.
Thank you.
Yes, if you have got any doubts or any questions at any point of time, then we'll be fine.
Online madam. YouTube channel. Mani register.
It was a very nice session, Akshay.
फक्त पैसे
Very clear.
Now we want only income